Hi everyone, welcome to the second webinar today where we're going to be looking at what's happening in the stock market, and in particular I think David's got Tesla up today using our quantum indicators, and in particular the Tick Speedometer to try and determine momentum in that particular stock. But before we go over, I pass you over to David. Can I just draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And I think actually, without any further ado, I'm going to pass straight over to David, and we can take this on to the next stage.
Hi again, everyone. Hopefully you can hear me. Hopefully you can just have a look around. Yes, you can see my screen. Wonderful. I can see it behind me on Anna's side. Lovely. This is Tesla, as Anna mentioned, and I've got it on 1 minute, 2 minutes, 3 minutes, and over here on the daily. So just a simple little workspace with 3 time frames. Just before we focus on that, let's just have a quick look at and see what the indices are actually doing at the moment, because it is quite choppy. This is all 3 of them. Are still trying to be positive. They're still trying to rally. This is on the daily at the bottom, so we've got the YM. The middle one is the NQ, and over on the right-hand side is the ES. But you can see the sort of price action on the top line here on the 5-minute time frames. That's what's going on in terms of the YM. Bear with me a moment. Hold on. Sorry about that. This is on the 5-minute. Just get that off there. Very much around the volume point of control, trying to break away from the volume point of control. It is bullish. It's remaining bullish on this time horizon, but there's a huge amount of congestion around here, and it'll be interesting to see whether this does actually indeed manage to break higher. Similar sort of situation on the NQ, but as you can see on the NQ, we are trading at the volume point of control, so it's no surprise to see congestion there. And that was really the start of it. It was really just this decline that was contra to what the other 2 were doing. They were negative, but not negative to that extent. So it's trying to rally back, but it's very congested around the NQ. And this is really the sort of picture we've got at the moment. You can see the volume point of control here on the ES, also on 5-minute. So it's there's no strong trends. And just to change tack for a moment, and I always make this point because I'm so sick of reading this online and seeing traders who profess that you have to trade. If you're going to trade an index, then on Globex, you've got to trade when the cash markets are running in parallel with Globex. And I have to say, it's the biggest load of hogwash, because you've only got to look at this. This is where we are. This is 2:30 in the afternoon our time. This is when the US markets open. As you would expect, we get a big surge in volume. That's what we expect to see. In addition to that, and part of the reason for that is because this is when the algos are in the markets. This is when you have very high frequency trading coming into all of these indices, but particularly the ES, to a lesser extent the NQ, but certainly those 2. The ES is the prime candidate that it's hit with algo trading, with high frequency trading, literally hundreds and hundreds of trades, and not necessarily per minute, but we're down to seconds here. They are scalping micro amounts, but in huge volumes, and that's why you see this massive increase in volumes. That's what it's about, and that is why you see this volatility coming. We've got the volatility indicator here, and you get this congested price action, a lot of whipsaw, a lot of chop. It's inevitable. It happens every single day, relentlessly. And yet, if you scroll back over here, this is, here we are. This is 2:30, right the way back to the London Open here, down on 8 o'clock. This is 8 o'clock UK time, just scrunched up a little bit. So this is 8 o'clock our time, so early morning. Forex markets are getting underway. yes, of course you get congestion, but what you don't get are these extreme choppy, big swings, massive moves, literally whipsawing backwards and forwards. You do get smooth price action in here, you know, and you get reasonable spreads. You're not getting huge wide candles. Yes, we had a nice rally here. Yes, it was on decent rising volume. Now, the reason that looks ridiculous is because it's been distorted by what goes on over here. But I can assure you at the time, would have been a perfectly tradable, perfectly sensible move to trade without any great stress, without you know, your nerves shredded by this volatile price action over here on the right-hand side of the screen. So I'm sorry, it's one of my hobby horses. I absolutely take issue with it. And if you want to trade indices, and what it also bears out in another way is for us in the Northern Hemisphere, it's nice. We have everything that we could possibly want. We can get to sleep when the markets are quiet, and we can trade when the markets are, you know, in full flow. Well, there is nothing on that chart in terms of Globex if you're in the Southern Hemisphere where you could quite happily trade Globex when it trades in isolation. It is perfectly fine. And I would actually suggest if you're a novice trader, it's better. It is lower risk and it is far less risky than trading what we're trading at the moment. Sorry if that sounds counterintuitive, but that's my view, rightly or wrongly, and I'm allowed to have a view because I'm getting old and crabby now. So there we are, that's what's going on. Let's have a quick look at it on the intraday basis. I think I've got the NQ up on the multiples. There we go. Load that up, there we are. So it's pretty much a similar picture. This is from 15 seconds through to 15 minutes. So 15 second, we've got the VPOC. You can see the VPOC on every single chart. It's here, 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 the yellow dashed line, here, here, here. So what are we expecting? Congestion. That is what we are getting at the moment. Let's go back over onto the stocks workspace here with dear old Tesla. Now, the one thing I wanted to show you, and it's really what we were talking about in this webinar, is really the Tick Speedometer, which ironically we developed for a different application. It's called the Tick Speedometer because when you're trading on tick charts as an intraday trader, the one thing that you never know is what to set your tick charts to. When you're a time-based trader, you choose your time frames and that's it. But when you choose a tick chart, you have to set that yourself, and it can be anything you like from 1 tick to thousands of ticks. The problem is, how do you know what to set it to? You don't. What most traders do is they'll go into a forum, they'll talk to other traders and say, well, what do you set your ES chart to for intraday trading? And someone will say, oh, I have it at 125 ticks, or I have it 250 ticks, or whatever it is. And that's pretty much what people do when they are trading off tick charts. The beauty of tick charts as opposed to time-based charts is that they are free of time. They do not have time as the metric. So what you see on a tick chart is very much momentum, because there is no, what's governing the delivery of the candle on a tick chart is the number of ticks you set it to. So if it's on a 50 tick chart, then 50 ticks will, once the 50th tick has arrived, the candle will close off and it'll go on to the next one. So it's not a question of time, it's a question of number of ticks. Now those ticks will come through very rapidly when the market is moving very fast. They'll come through more slowly when the market is moving at a more leisurely way. So the actual time that each of those candles takes is very different. Each one will be different and is totally dependent on how quickly the market is moving or how slowly the market is moving. So that's why we developed the Tick Speedometer, which is this indicator at the bottom here, to actually deliver, and I'll show you to you on the workspace, to actually deliver the optimal tick setting for any instrument, any time frame, and multiple time frames. So if you set it on a 1 minute, it'll tell you what the tick speed should be. If you set it on a 2 minute, it'll tell you what it should be, 3 minute, 5 minute, whatever. It'll tell you straight away what the tick setting should be. But the way we use it here is very much to deliver what I talked about there, which is really momentum, because you have these color changes here. And what the color changes tell you is whether the market is moving with momentum or whether it is sluggish. When you get these little green impulses coming in, that is telling you that's high tick activity. We're seeing a pickup in momentum, pickup in activity in terms of tick activity on the chart. But where you've got it in red, it's very sluggish. And ideally what you want to see as an intraday trader, and this applies whether you're trading on a tick chart or whether you're trading on what we are here, which is a stock chart, you want to see momentum as an intraday day trader. And what we're seeing at the moment is very, very choppy, lots of red all over the place. So this is on the 2 minute. We've got lots of red here, punctuated with bits of green, but nothing is sustained. And down here, we've got a very similar sort of picture. Now, the sort of price action you expect to see, let me just pop this up full size. The sort of price action you expect to see when you've got this sort of color arrangement where you've got lots of red, not much orange, and no green is pretty much this. You are moving in sideways price action, and really it gives you in sharp contrast what's been going on earlier on. We did actually have some decent price action down here, and as you can see here, there was lots of green, but also lots of orange. So green and orange is a great combination. It tells you, yeah, it's a there's decent momentum in the trend. In other words, there's decent tick activity in terms of what it is you are trading, and that's what you want to see. So when you get into these sluggish periods as we are here now, where you've got lots of red and not much orange and virtually no green, then it's telling you, and you can see it as far as the price action is concerned, you know, it's just going sideways. There's no volume here to drive this one way or the other. Part of the reason it's going sideways is because of what we're seeing on the indices where they are in congestion. That's not to say that because an index is rising strongly that the stock itself will rise strongly. It doesn't always marry in that way. And part of that is down to the fact that, you know, how much weight does this particular stock carry in the index? It's one of the primary things we're covering in the program. You have to understand how much weight does this stock carry. If it's hugely influential, fine. If it's not hugely influential, then don't expect it. You know, these are the things you need to understand. At the moment, what we're seeing with Tesla on the daily chart is ironic because traders will be trading this because they want volatility, because under normal circumstances, this is the sort of price action they want to see. Lots of volatility, lots of movement, lots of, you know, up and down. They can trade in and out. But what we've seen over the last few days is we've seen volatility absolutely drain away. The options market will see this, you know, options will be cheap, whereas normally they'd be expensive because it's a relationship with volatility. Here, the options prices will be much cheaper. They're big, and the guys who are looking for volatility in Tesla will be absolutely crushed at the moment because the volatility is drained away. We're just moving in this sideways price action all the time here, which for Tesla, which is normally quite a volatile stock, is unusual, but that's the nature of the beast we're dealing with at the moment. So it's really replicated across the whole spectrum of time frame, if you like, from the fastest right the way through to the slowest. But that's how we use the Tick Speedometer in terms of applying it to a regular time-based chart. It could be a stock, could be anything else. We happen to use it a lot with stocks, but it just gives you this perspective on what are we seeing. Because if we're going to go into this and trade it, what we want to see first of all is we want to see some changes here on our fastest time frame, which is 1 minute. Sorry, let's get rid of that. So we want to see this transition here from red. We want to see lots more orange. We're starting to see green come in there. Now we want to see that transition across here. We want to see this start to change. We want to see it move into other colors, away from the red, out into orange, out into green, and the same down here on the slowest time frame. So as always with trading, what changes first is your fastest time frame. You want to see that ripple through into your medium time frame, down onto your slowest time frame, which is our 3 minute time frame. We've just got the daily here for context. And that's how to apply the Tick Speedometer. Then, of course, what you're looking at, we've got a nice example here of, yes, we've had an increase in volume, but what has that increase in volume delivered? In terms of tick activity here, well, it's actually delivered a volatility trigger, which is not particularly what we want to see, because what that implies is that we've got volatility, we've got the market makers involved, and we are likely to see one of two things, either congestion or possible reversal. At the very least, we're going to see some congestion because the price is closed halfway down the candle anyway. So in terms of a continuation of this move, now we have to be patient and wait. What we're looking for now is a move beyond 934 up to 935, clear that area. What have we got ahead? Well, we've got resistance here, we've got price-based resistance ahead. But if we can get up to 936, then the volume on the histogram starts to fall away, and we're up into some nice clear territory in terms of volume acting as resistance, or indeed price-based resistance. But as you can see down here, you know, it looks as though we're migrating back into red. No real follow through. There's no real momentum to the move, and that's what it's really all about. It's finding moves which have momentum, and that's what the tick speedometer really just highlights very graphically. This momentum issue of, am I going to trade something that's got some momentum, or am I actually trading in a congestion phase where I'm going to get stuck in whipsaw, or I'm going to be sitting in congestion just hoping that, you know, the trade goes in the right direction? And when you see things like this, you've got the indicator here, the volatility indicator triggered off, and you know instantly that you're going to see some sort of congestion build, possibly even a full Rome reversal, maybe back down to the volume point of control. Now, very quickly, just to hop over onto the tick charts, here we are. I can't remember what I've got set up here. Okay, I've got the NQ. Excuse me. And this is what I was saying about the reason we developed the tick speedometer, which we now use in other applications. I've got a 15-second, a 30-second, and a 1 minute. So pretty fast time frames. This is on the NQ. And down at the bottom, I've got the equivalent in terms of tick charts. And what I've got set up down the left-hand side here is basically the 15-second tick speedometer, the 30-second tick speedometer, and the 1 minute down here. And what that is delivering, it's telling me what to set this chart to. What do I set this number of ticks to for this particular index at this point in the trading session? Because this is always going to vary. If I was doing this very close to the end of the trading day for us, maybe 8 o'clock, 8:30, something like this, these tick values would be very much lower because the participants have drained away, the momentum has gone from the market, it's coming into a closing point, and the tick value has therefore fallen. But at the moment, we're in the sort of peak period. We've been trading, you know, we're going an hour and a half so far since the open. So there's lots of activity, lots of participation. So the tick value is high. Now, the other point about the tick characteristics, if you like, is if you compare the YM and the NQ, this is the other thing that tick traders also, the other big mistake they make is they assume that tick value for the NQ is the same as for the YM, is the same for the ES. It's absolute nonsense. The ES has massive tick values. It's the heaviest traded. Sometimes on these sorts of timeframes, they'll go up to 8, 10,000, as opposed to here, you might be in 2,000. On the YM, you might be on 500. It's just matching your tick speed to the correct setting for that particular instrument at that particular time of the trading day. And that means you are trading in harmony with the market. You're not trading a tick chart which is so way out of whack that it gives you absolutely no chance. So as you can see, we've got two numbers up here. The reason they are different is because as you can see, they move around very quickly. If you look at optimum, this moves around all the time. It's constantly changing, but this number down here changes less frequently. And the reason we've done that is because if you're trading at this time where you've got both electronic and the cash markets running, you don't really want to be changing all the time. So I will use the nearest fib number. It's nothing to do with Fibonacci other than a mathematical way of giving us the closest approximation to the actual. So I would set this up. The moment I change this over to 233, just type in the number, stick a T on the end, and that's how to change the tick chart on Ninja. It's changed again already, but I'll just set these up. This one's at 610, so just change that over 610. And then finally down onto the lower one, which is at 1042. So those are the settings I'll use when I'm trading both. When I'm trading purely on electronic, as I mentioned at the start of this, then I will tend to go for the optimal ticks, which are these, because you know I don't mind so much. They're not going to change so frequently because the activity is low, participation is lower, and the price action is much, much smoother. And in addition to that, what this also gives us, it gives us two things. It gives us the opportunity to trade a chart with momentum, which is a tick chart, because you don't see momentum on a time-based chart. And finally, it also allows us to combine volume price analysis, all the benefits of volume price analysis from a time-based chart, and match it with a non-time-based chart, which is a tick chart. So that's the tick speedometer. There's two sides of it, if you like, using it conventionally with tick charts, but also much more in terms of using it with a stock-based chart to give you that view on momentum, which is what we want to see. Let's just take a quick final look. There we go. So what happened here? We saw it on the 1 minute. We saw that volatility come in. What are we expecting? Sideways price action is exactly what was delivered. So there we go. I'm going to wrap it up there. Hope you've enjoyed it. Just very quickly, if I can find it very quickly, just where to find all the indicators. You'll find them at quantumtrading.com, MT45, NinjaTrader, TradingView, and TradeStation. They are all there. And if you're not familiar with Anna, you'll find her at annacooling.com. All the books up on Amazon in Kindle version and in paperback. Extremely popular, as you'll probably see from all the various comments that are up there, which are very humbling, I have to say. So thank you very much indeed for coming along today. Hope you've enjoyed it. We will see you at same time next week. Thanks for coming along today. Enjoy the rest of the trading day and stay safe. See you soon, and bye for now.